Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Michael Saylor has once again taken center stage in the Bitcoin conversation, and his conviction hasn't wavered one bit. With the Fed expected to cut rates this September, history reminds us that Bitcoin and crypto often thrive when liquidity returns, especially in the final quarter of the year. The stage feels set, and Saylor is leaning in harder than ever. While most investors are still debating their next move, Michael Saylor and MicroStrategy continue to quietly, coiled, yet aggressively execute their Bitcoin playbook. Every dip, every chance, every opening in the market, they're there, adding more BTC to their balance sheet. It's not just confidence, it's a long-term strategy that's turning into a masterclass in conviction. And the bigger picture? Stock market voices like Tom Lee are now calling for Bitcoin to reach $200,000 by Christmas. That's not just a number. It would be an unprecedented moment in financial history, a point where Bitcoin steps out of the shadows of speculation and cements itself as a global financial force. Michael Saylor's vision, combined with these bold predictions, makes one thing clear. This isn't just another cycle. Something much bigger could be unfolding. But before we dive deeper into Saylor's insights and his latest CNBC appearance, I've got a quick favor to ask. Hit that like button, share your prediction in the comments. Do you see Bitcoin reaching $200,000 by Christmas? And make sure to subscribe. We bring you fresh videos every single day, so you never miss a beat in Bitcoin and crypto. Now, let's get into Michael Saylor's perspective and see why he's doubling down when others hesitate.
But in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, $217 million this morning?
$217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin-type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
You mentioned that you bought $250 million this morning, or $217 million this morning as you walked in. What's your dollar cost average for what you've paid for Bitcoin?
About $73,000 a coin.
And I guess, I wonder if you think Standard & Poor's or others, or, you know, if anybody has any sort of bias towards crypto still at this point, because the S&P 500 just came out with their decisions, and they chose to go with Robinhood and AppLovin over Strategy. And a lot of people were kind of surprised by that. The stock actually was down a little bit. Do you think that there is a bias at any of the indexes or any places that come through this against a company with a lot of Bitcoin in holdings?
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time. There's a digital transformation in the markets. This is a brand new, novel concept. Every quarter, we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
Can we just go back to the preferred piece for just a moment? Just because I think people want to understand, what a leveraged bet this is. But you're suggesting that because it's preferred, it never comes due. How can it be that they never come due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 20, 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's practically speaking possible to take your leverage beyond 20% to 30 or 40% even, but you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now, these sort of treasury companies that are emerging, SPACs and other things, that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first. So there's an explosion in the past 6 months.
But I'm curious about some of these levered efforts that may be using actual debt, not preferred the way you are, and how you think about them in the marketplace.
Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds. They may do it with converts. They may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit. Companies like Metaplanet will probably issue preferred stocks. They'll do it in Japan, in a yen basis. Most other companies are just going to creep into this by building up their capital base, and they're not going to get into the business of issuing credit instruments backed by Bitcoin.
How much leverage do you have?
We have about, 11% of our Bitcoin holdings are bonds, so convertible bonds, and like another 9% are preferreds. Okay. So not that much. I mean, really, we have $72 billion of Bitcoin. We have $8 billion of convertible bonds that will eventually equitize.
The countdown is on. All eyes are locked on September 17th, the date the Federal Reserve is widely expected to make its next move with rate cuts. It's the kind of moment that could ripple across every corner of the economy, and yes, even Bitcoin. Treasury Secretary Scott Bessent recently struck a confident tone, noting the jobs market is showing real signs of strength. Reports from July and August back him up, suggesting businesses managed to perform surprisingly well. But here's where it gets interesting. The ISM remains below 50, a signal that manufacturing has been under pressure for quite some time. That mix of optimism and contraction creates a tension that the markets can't ignore. And then comes Tom Lee. If there's one voice that has consistently leaned into bold predictions, it's his. While most analysts are focused on traditional market signals, Lee is already connecting the dots between the Fed's next move and Bitcoin's potential trajectory. His latest price call is one you don't want to miss, because if he's right, it could reshape how investors look at Bitcoin heading into year-end. So buckle up, because this isn't just another market update, it's a story still unfolding. Take a listen to Tom Lee as he lays it all out.
I think on the margin, I'd agree with Treasury Secretary Bessent's comments for two reasons. One, when we go through corporate earnings, we don't have any increase in comments from businesses saying business tapered off in July or August. So even though the labor market shows like it's deteriorated the last 2 months, business conditions haven't. In fact, even the Fed's beige book, most regions reported improving conditions. So that is one thing. And the second is we know the labor market undergoes a lot of revisions, and we get September's benchmark revisions. I think it may show that the job market's been weak all year. And in fact, maybe the last few months have actually been stable. So I think Treasury Secretary Bessent is sort of correct to an extent.
Hey, Tom, Bitcoin, before we let you go, tell us what you think. We're at about $111,000. The upside, the downside from here?
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double. But that's also going to be
almost a double from here. Let's just, hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think we, by Christmas time, effectively, we could be at 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation?
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date, the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls, less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish. And we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
And that brings us to the end of today's video. Michael Saylor's unwavering optimism about Bitcoin's future, paired with Tom Lee's bold perspective on both Bitcoin and the broader stock market, leaves us with a lot to think about. The stage is being set, and if the Fed moves forward with rate cuts, the ripple effect could act as a massive tailwind for Bitcoin and crypto assets. The idea of Bitcoin reaching $200,000 by year's end might sound wild to some, but let's not forget, this asset has delivered jaw-dropping upside moves before. History has a way of surprising even the most skeptical investors, and while nothing is guaranteed, the possibility feels closer than ever. Of course, always do your own research before making financial decisions. But here's the real question. Where do you see Bitcoin by year's end? Drop your thoughts in the comments. I'll be reading and watching out for your takes. Before you go, don't forget to hit that like button, share this with someone who needs to see it, and subscribe so you never miss an update. Thanks for watching, and I would see you in the next one.